Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah. Well, it's an interesting day of trade simply because there's so much confusion around the mid caps and small caps, and I'll get to that in a bit. First, what's happening to the world markets? Well, Nasdaq had a slightly iffy Friday trade, because of which that index had corrected a bit, but the Dow and the S&P were flatlined for better part of the trading day on Friday, and therefore the cues, if any, that come in this morning could be for a short period of time. Just keep that at the back of your mind. It's a very important week, this one, simply because we have a bunch of decisions lined up from a central bankers, and therefore from that perspective, maybe the world markets would be a bit quiet, but keep in mind, they would change at any point of time during the course of the week. The Asia, from the looks of it, almost all the Asian markets have started off okay. So you don't have a bad start on the morning for ourselves. And the SGX Nifty will come up on your screen next, and it'll show you how we are poised to start off after what was, let's say, a week which was filled with good market breadth and good broader market action. But the larger market action was, if anything, a bit quiet. Well, so we do have a promising start for ourselves today. The question is, can it last during the course of the day? Well, we'll get to know that as the day shapes up. Now, remember, viewers, as I said, that there is a lot to watch out for this week, simply because the Fed, the BOJ, the BOE, all of them come out with their decisions. Japan picks up a new leader as well, and therefore, it is a very important week from a global market perspective, mind you. Some of these, I mean, the new Japanese leader may not have ramifications. I doubt that the US Fed will say something which is dramatically different from what they have already. But you never know. The Fed has outstripped the BOE and the ECB in terms of stimulus measures. Could the BOE come out with something which is interesting? Well, time will tell. Of course, from our market's perspective, and purely as the trade setup is looking like, frankly, Sebi's new rule, still to my mind, does have the potential to aid the sentiment in the small caps and the mid caps. And if you just look at the kind of subscription that Root Mobile, Happiest Minds, etc. got, it's indicative of the risk on mode at the broader end of the spectrum. But there is some bit of clarity that is required. Viewers, I'm trying to give you some clarity about what Sebi's new rule is. It'll take a minute, but just bear in mind that there is a bit of uncertainty surrounding this. Now, I've spoken to the best of minds really over the last 2 days. I've tried to analyze this very, very strongly late last night as well. But there were guidelines, and there was a subsequent clarification that came out late evening, and let me lay it out for you. So the investment guidelines for the multi-cap funds have been tweaked to 25, 25, 25. That stays. That doesn't change. So if you think that Sebi's new clarification that came in changes this, no, it doesn't. But the belief was rather that when the new guidelines came in, that small caps will see an inflow of nearly 25,000 crore rupees. Now, just keep in mind that by virtue of what SEBI is trying to do by the clarification and emphasizing upon that, is that they are saying that large cap, I mean, the belief now is that at least if the large cap schemes get merged with other schemes or are converted into another category altogether, what if there is a flexi cap category that comes out or gets done into, then the inflows into small caps could reduce. So please keep that in mind. I mean, you besieged with WhatsApp forwards and Twitter forwards of a list of names that will benefit out of this small cap flows. They could well benefit, but the inflows need not necessarily be as strong as people would have made you believe. I spoke to fund managers, and they said, of multi-cap schemes, and they said, okay, it will be foolhardy to think that a fund manager will go out and buy a stock 25, 30% higher. He's answerable to an investment committee too. So please be mindful of that. Don't go out and think that all of this is set and done, and therefore you want to go out and make merry and preempt what mutual funds would do. I think the quantum would vary quite dramatically. So you have to bear that in mind, viewers. Now, having said that, keep in mind that, as I said, the risk on mood is clearly evident. It's evident from the FI flows as well to an extent. And I just think that might just aid the bank nifty. I think I've established or tried to establish that correlation. It's a very loose one. There's no science to this. But I think the last 2 months, we've observed that whenever FI is put in money, banking stocks tend to perform. The last 2 days, while FIs have been net sellers in September, The last 2 days has been a bit of a turn. Just keep in mind. Let's see if this continues or not. Now, in light of all of this, what are the things that all of us should watch out for, and what are the stocks that one should watch out for? First, I think I was looking at the derivative action in Friday's session, and there was some interesting moves that happened in some specific names, some long build-up that was done. And some of these stocks might continue to do well. Some of these stocks might actually correct as well, because people would have built them up thinking that these are the stocks that will do really well. If indeed these rules come out or whatever, maybe people had some inkling about this happening. So some unnatural, massive price and volume action in Coforge, for example, right? The erstwhile NIIT Technologies. Just be mindful that maybe some of these names could or could not move. But yeah, the gold finance companies as well, Muthoot and Manappuram, had some fairly decent price and volume action. Short covering seen in Manappuram in a big way. Muthoot Finance built some longs. So do watch out for these names. From a news flow perspective, Bharti Airtel would be very interesting, because there is some rating and outlook change that has been done by Moody's. The change in outlook reflects the improving profitability at core Indian mobile business for Moody's. And there are some other factors too. It's a dog of a stock, the last few. Could there be a bit of a bounce? Let's wait and watch. I usually don't think rating agency changes lead to bounce back in stocks, but you never know, because this is so beaten down, you might just have a bit of a bounce. So do watch out for this one as well. That aside, there are 2 or 3 other names, couple of names from the Adani Group stocks, and one more that I would want to highlight. So let's get those graphics up as well. Deepak Fertilizers is the other one. The rights issues in price has been set at 133 rupees per share. It's a discount to the price of 160. The entitlement is 3 for every 20. The issue will open on September 28th, closes on October 12th. Deepak was at 185. At that price, 133 was a good one. Here, bit of a touch and go. The 2 Adani Group stocks, Adani Green and Adani Enterprises. Adani Green, in a con call, the management said that their deal to buy SL Solar assets is in the final stages, and they're seeking $1.8 billion to build projects. The stock, the ambition is right up there. Let's wait and watch how this one tracks. And Adani Enterprises, now it's made a habit of bagging large orders, procuring a lot of very interesting business models. Now their arm, Adani Land Defense Systems, has acquired a stake in PLR Systems, which makes it eligible to manufacture defense equipment. Do watch out. Adanis are getting into defense equipment manufacturing too. Indigenous defense equipment manufacturing is going to be the next big thing as per the defense ministry. Adani is putting its hat in the ring. Let's wait and watch how this one reacts today. I dare say, do watch out for individual names. Just before I get to what stood out for me, watch out for IRCTC, BHEL, and Mishra Dhatu Nigam. All of these PSUs had a terrible quarterly performance. BHEL had a shabby performance. I wouldn't be surprised if BHEL has some downsides in the session today, viewers. So watch out for BHEL. Revenues were down 56%. There was an EBITDA loss. Segmental revenues look bad. So I wouldn't be surprised if BHEL corrects a bit. And watch out for Hexaware. From what we understand, the institutions are tendering the shares to the reverse book building at a price of 475. Maybe there's some excitement around Hexaware. Last but not the least, what stood out for me, and this is not happening in our country, it's happening in Israel, but it's a template that could come up in certain pockets as well. There were rumors of this happening in Lonavala, which is a hill station about 120 kilometers from Mumbai. But Israel has done this. They will reinstate a strict countrywide lockdown this week. It's the surge in coronavirus cases. The Prime Minister made the announcement in a televised speech on Sunday, their Prime Minister, and the lockdown is expected to apparently last 3 weeks. Now, this is something that happened late last night. And if this is happening in one country, it would happen in multiple others. Are we looking at a wave 2, a stage 2 lockdown? And what could that do to sentiment and economy? You have to keep all of this in mind while you're making fresh investments, viewers. Take care. Have a great trading week ahead.